Last point before I take questions, because I know you're going to have questions on this. What did you think on the jobs report? I already said on Friday. But this month's jobs comparison, year-over-year comparison, is tougher by a two-bagger. It's 2 times higher. Again, the October jobs comparison, the amounts of non-farm payrolls last year versus this year, is tougher by a factor of a two-bagger, 2 times. Like 290,000. What is it? It's in the early look note this morning. So again, there's a pretty good chance.
I remember it.
And people say, well, how do you use that comparisons? Well, when you report year over year, this was slide 21 in the old slide deck. I don't know what slide it is in the current slide deck, Josephine. But when you're looking at the probability rising of non-farm payrolls going negative year over year, which is 100% right now, that's the chance of that happening, 100%, which I think is a pretty good thing to go with, 100%. You know, what in your life, other than, you know, sitting on the throne in the morning, is 100% probability? I mean, that is 100%. So when you bump up against the toughest comparisons, which are October, November, December, the probability right now of U.S. jobs getting really bad, like this month could be really bad year over year. Right before the election, that number gets reported. Isn't that interesting? But maybe not surprising. You know, for this, I don't even know what I'd call this human being at this point, unfortunate. But it would be a catalyst for Trump if that jobs report was a certified train wreck on the Friday before the election, which is, you know, obviously happens in the week after. So again, that's our forecast. We're not changing it. October, November, December. Get ready for some very bad jobs reports. And in the face of that, you know, that's your catalyst of the Federal Reserve turning tail and going back to dovish, which obviously they've done 3 times this year, and this, I think, will be the 4th.